Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, I want to talk to you about how much lower you can get your taxes to be by taking advantage of all the sales in 2023. What are the sales, Chuck? Well, tax rates are on sale. Roth conversions are on sale. The tax brackets just went on sale. And let me give you an example. Because of all the high inflation with all this drunken sailor government spending, right? Trillions and trillions of dollars. In fact, they just shoved through, right, passing the Secure Act 2.0. I'm going to teach you on the impact for those of you that have IRAs, almost 1.7 trillion. And when you look at all this spending, what that's done is it's forced the brackets to expand by about 7% before you get pushed into the next bracket. Well, that's a real benefit for those of you that want to get the IRS out of your IRAs or Uncle Sam out of your income, because you can't beat zero tax rates, folks, but you can get there. And with Roth conversions on sale, because many of you have account values that are down 20, 25, 30%, let me teach you how to take advantage of a deduction that you have to qualify for in combination with the conversion to offset the tax. But learn, this is how the ultra wealthy do this, folks. And it's not just doing it for the tax deduction. It's also been a very strong yield, averaging between 14 and 21%, plus the ability to have equity on profit on top of the tax deduction, in probably the leading sector of growth, which is why Warren Buffett, has put billions and billions into the energy sector, and learn how you can too. I'll teach it this Tuesday at retirementprotected.com. That's retirementprotected.com. But let me teach you this. Tax rates are on sale. The Tax Cut and Jobs Act is set to sunset, so all the tax rates are going to go up about 3%. The brackets just went on sale because they've expanded with all this inflation up about another 7% before you get tossed into the next bracket. And Roth conversions are on sale because many people's account values are down between 20 and 30%. So let me take an example and go through this with you. And here's the key. Requirement of distributions just changed in the Secure Act 2.0. So there's more time to be able, if you've not been forced into these requirement of distributions. So if you're born between 1951 and 1959, you now don't have a required distribution forced upon you by the government till age 73. If you're born 1960 or later, you now, with the law already put into place 10 years from now, you don't have a requirement of distribution until age 75. Now, this has been met with mixed emotions because the longer you defer, as I've been teaching and writing about for years, the higher tax you pay. So don't see this as the government giving, it's the government taking indirectly. So the shorter time period you put these distributions into, the higher the amount of distribution and the higher tax or tax bracket it's going to force you into. So tax rates are on sale, Roth conversions are on sale, the brackets are on sale, and here's what you can do. One deduction allows up to, let's just use 75%. It's averaged about 80% for the last 15 years that we use, our family uses, a number of our client families. We just got access to this for our client families in this particular program. And many people took advantage of using this. Let's say you've got a $100,000 IRA that's now down to about $75,000 of value, and you want to Roth convert it. Well, if you have, let's say, savings or underperforming assets or what have you, and our tax team will teach this to our clients, it's a big difference between tax prep and tax planning, right? Somebody prepping you on the boxes to check and the dates and the deadlines to file by versus tax planning, teaching you strategies that will get the IRS out of your IRAs and Uncle Sam out of your income. Well, taking this cash, and let's say someone used $100,000 cash, creating a 75% or $75,000 deduction, that can be used to offset the $75,000 Roth converted. Before the $75,000 IRA jumps back to 100, you'd rather have that in a Roth holding, use a deduction to offset the taxes. Many of you have said, look, I just don't want to pay the tax. Well, some of you it may not benefit you at all. For those that have been high income earners and high savers in IRAs, folks, the time to convert is now. Learn how much lower your taxes can be by taking advantage of going to retirementprotected.com. That's retirementprotected.com and register. It's a complimentary log on to learn educational webinar where I'll teach you several strategies, but this strategy in particular of how much lower your taxes can be in 2023. Retirementprotected.com, retirementprotected.com.